This week on Geneva Roadshow.tv.
大家你好，我们是北京首创 PE 投资基金。
Lots of money chasing few good deals.
The market is moving away from foreign-controlled funds to native Chinese funds.
We can better understand than the pure investors to understand Chinese market situation.
So I don't think the PE market is too hot. It still has a long way to grow and rise.
A lot of fund of funds will try to invest in what they already know or what has worked 5-10 years ago. However, in China, that doesn't apply.
Perhaps, do you need to, is that your wife calling?
Very good. Wait.
Geneva Road.
TV.
Welcome to Geneva Roadshow.tv. It's the year of the dragon. I'm Scott Arnell, and this week we are in Beijing, home to the largest state-owned enterprises. Beijing Capital Group is one of the largest. We're going to take you to get an update from the Beijing Capital Growth Fund. Are you ready? Let's go.
We are the private equity arm of Beijing Capital Group, which is a state-owned enterprise of the Beijing municipal government and one of the largest conglomerates in China, focusing on real estate, infrastructure, and financial services. Our private equity arm falls within the financial services group, along with investment banking, loan guarantee, retail banking, and insurance. We have focused on small to medium enterprises and have listed them on the A-share markets in Shenzhen, the Shenzhen SME, and the Chinex board. Almost 2/3 of the companies we've invested into have either IPO'd or are currently in the IPO queue in China. We also combine native Chinese expertise with Western international expertise as well. We have non-Chinese, including myself, who are in management positions, decision-making roles, which is very rare in China for a government-affiliated fund. We also have a complete nationwide network. We source deals from Beijing Capital's 32 offices around China, our relationships with municipalities around the country, government agencies around the country, as well as our affiliated investment bank, First Capital Securities, and our loan guarantee houses, which are the largest loan guarantors for small to medium-sized enterprises in China. Last year, we IPO'd 2 companies. One IPO'd at a 59 price to earnings multiple. Under 3 years, we IPO'd the company, and on paper, over an 11.5x return. Another company we IPO'd, a glass technology company, IPO'd at a 45 multiple.
But right now, for example, like P multiple, overall is pretty low.
Right.
In China, with a growth over 8% as an emerging market, for this kind of PE, 15% for blue chips, and for small and medium companies around 30, it's pretty low.
Okay.
And it's very cheap.
We've seen a drop in valuations since our 2 IPOs on the domestic exchanges by approximately 25%. And correspondingly, we've seen a drop in private company valuations, which we believe is a very good thing for the market. Valuations in 2011 and even early 2012 were too high, we believe. And now the private company valuations have dropped, and we believe will continue to drop for the next year to 18 months.
这段时间呢，这个热点
Lately, the hot PE market has cooled off a little bit, along with the economic downturn. This decline in PE market valuations will be better for those seeking to invest. But I look at it this way: with the smooth transition of China's economy, and also after the new central government is elected by the next National People's Congress, my prediction is that the economic situation will develop positively in a stable manner. there will be steady
也
growth,
会我们叫企稳吧，也会出现
and
一个
then the
稳定的
PE
一个
market will
增长。
become more
这个时
active.
候的 PE 市场依然还会进一步的活跃。
We see the restriction on liquidity because banks basically stopped lending money to the SME, to small and medium companies, so they come to us.
So the public markets have dropped for SMEs, and the private markets have dropped even more so because the public market multiples have dropped, and also because the constriction of available financing.
Because of the transition from the low-end manufacturing to high to technology intensive and capital intensive sectors, we see lots of good deals from small and medium companies more and more.
We believe that over the next 18 to 24 months, it's a very good time to invest equity in the private equity market for the SMEs.
Under the conditions of the economic downturn, I think it is a very good opportunity for us. I also think it is like investing in stocks. We should buy low, sell high. Before, companies were too expensive. Right now, it is a really good opportunity for PE funds to enter this market and seek out investment projects to get value. I believe this is a very good time to be investing, and not the opposite. In China, I think that the local Chinese fund companies obviously are able to work more efficiently in their own backyard. The cost of raising funds and seeking out projects is relatively low. Their investment, the overall effort and financial resources required is substantially less than for foreign funds. In addition, the Chinese funds clearly have more advantages in culture, proximity and government support compared to foreign funds such as Carlyle.
The capital group itself is local.
Yeah.
The in Beijing market, and of course, just what I mentioned, we already have all kinds of, depends on the other business, for example, the water and wastewater, and like the real estate the project separated all of China. That means we can better understand than the pure investors to understand Chinese market situation.
The market is evolving quickly. The domestic managers have eclipsed and continue to dominate now the private equity market over the foreign fund managers. What appears to be a domestic fund manager to the LPs in the United States and Europe, such as Hony or CDH, are actually considered to be foreign investors from the standpoint of the Chinese private equity market.
There probably are far fewer investors who are aware of our funds, but when you talk about Carlyle or JP Morgan, everyone knows about them.
Our guarantee company already guarantee more than 7,000 enterprises. There's no any relationship with the government. We do everything. We do the commercial actions. There's no any influence by the government.
The government funds are more government guided. To me, there are a lot of government oriented elements. Funds like what we have are totally market oriented. This is the difference. We seek out projects according to the market oriented way and for profit. So we are different on this point. This is the first point. And the second is management. The management of the market-oriented funds is more effective and more profitable than the management of the government funds. This is simple and obvious. The administrators of the government funds are assigned by the government and they get their salary and bonus. So their sense of responsibility is not as strong as the market-oriented funds administrators. So I think it is obvious in China, and people in the PE and VC industry all know it. Government-oriented funds are never able to beat market-oriented funds. It is obvious.
Beijing Capital is very progressive with respect to government-affiliated funds in China because we have a non-Chinese, a part of the management team, which we believe that no other fund, government-affiliated fund has.
另外就是我想补充一下，就是我们这支基金也可能是
Also,
我
there
们
is
在
one
中
point
国
that I want to add, which is that this fund of ours in
把它
China,
做成一个这
I
个
would like to make it into a
中
model
美
for a
或者
joint
中外
Chinese
合
foreign
资
investment
的
fund
这
that
个
is
基
truly
金，真正
localized
作
in
为合
China
资基金
that
落地
other
在
funds
在
will
中国的
copy.
这么一个想做成这么一个典型。
We believe that we're amongst the most progressive groups by having a mix of local government, Chinese local acumen, as well as Western expertise and non-Chinese decision makers on our investment committee and management team.
这一点我也是有信心。
We are the first,
因为
and I have
刚才讲过了，
confidence
这
in
个
this model.
你刚才举例讲
We
像
have the
凯雷这样的
advantages
这
of
样
both
的大
Chinese
法
and foreign
这样的
funds
基
with
金，
Chinese and
说
foreign
在中国
investors.
做得非常好，非常有名。
Beijing Capital Group, has a big infrastructure. That's where we can add values to the company. Our way of getting deals is not just price. We emphasize the value added. If we can add technology, we can add the markets, we can add brand name, we can add natural resources, we can add human resources. All of these production elements to the company. If we can really add good values to the company, not just struggling over the price. And so this is kind of value versus price. That's what differentiates us from other companies.
但是呢，我自己感觉就他们很多的基
The
金
famous brands such as Carlyle, people say that they are doing very well in China, and they are very famous.
真正的落下来和我们那个真正能打成一片。
But actually, I feel like many of these better-known funds have not truly become localized in China, and therefore are not able to operate and become a truly Chinese foreign joint investment parallel fund like ours. This is one of my visions for the future of China and for our group.
All right, that's it for the Beijing Capital Growth Fund. If you have any comments or questions or wish to contact them, just fill out the form beside the video window here. If you have any comments for us at GenevaRoadshow.tv, click on the button below. We read them all. Like us on Facebook, follow us on Twitter, link to our LinkedIn group. I'm Scott Arnell for GenevaRoadshow.tv, and remember, if it's on the internet, it's got to be true. We're coming to you from Beijing, or Peking as it was originally Romanized. This is the political capital of China. Over 20 million people live here, the second largest city in all of China, second only to Shanghai. We're coming to you on the Year of the Dragon. It's the one animal in the 12-year cycle that's mythological, and lots of construction going on.